Caterpillar shares are popping this morning. High infrastructure spending driving the company's profit higher. The construction equipment company seeing revenue increase by 22% to $17.3 billion. Adjusted profit per share of $5.55, which is considerably higher than estimated, as you see there. The company also saw higher operating profit margin compared to a year prior, 21.1%. David Mazza is still with us, Roundhill Investments Chief Strategy Officer. These numbers from Caterpillar were pretty impressive. I was struck by that profit margin, which was an expansion from under 14% to over 21%, which is that's a big increase in profit margin here. A lot of all of this, though, I saw was coming from pricing. Volume was increasing, but a lot of it was coming from pricing. So I just wonder, as we look at Caterpillar, again, what it tells us.
Yeah, and it's telling us some conflicting signals, which is to me one of the reasons it's a bellwether is it's telling us why it's so conflicting in this market environment. Two things you noted: a lot of the great earnings that came and the revenue came from pricing increases. So actually, Caterpillar was able to pass on higher prices to continue to help their margin to their consumers. Right, 75% is things like machinery. If we look, though, at the regions, that's when we start to see some big differences. U.S., North America, relatively strong. China, and the outlook for China remains weak. And we know that's been a big question mark, right? What's going to happen with the Chinese economy? We're having inflationary pressures. So to me, Caterpillar numbers and the rear view perspective, the revenue earnings, really great. Maybe perhaps one of the reasons why the stock isn't necessarily popping. It was actually the best performing Dow stock in June, had another great month in July. So some of it could be a bit of buy the rumor, sell the news in this example. But what's interesting is on the outlook perspective, at some point, the slowing in China and the slowing in Europe has to catch up with names like Caterpillar. We haven't seen it yet, but looking ahead, their forecast was not necessarily as rosy as some might hope.
How much from those international segments can we extrapolate from Caterpillar and apply to some other companies that are going to be reporting earnings? I mean, we were citing that FactSet data earlier, talking about S&P 500 companies that had more international exposure and the reported earnings decline that they had been seeing. So kind of if we look through Caterpillar's numbers here, we've got Apple coming out later this week. We've got some other major chip makers that have exposure internationally. How much can we extrapolate from what Caterpillar is telling us about their international and China-specific business and kind of layer that on to what the expectations are for the rest of this earnings season too?
I'd say likely a lot. And the reason being that it's likely a lot is for the fact that we are seeing this bifurcation. It's been a perennial issue that the U.S. economy and U.S. markets have outperformed internationally, especially if I look at Europe and then emerging markets. Look at a chart comparing the emerging market index to the S&P 500, and it's been a one-way trade essentially for over a decade. Now, with normalization of interest rates from an economic perspective, to me, one of the themes that I'm seeing is that lets winners and losers start to emerge. It actually lets winners and losers, bulls and bears on individual stocks kind of fight it out without the fact that just low rates will actually kind of propel everything higher. But what's interesting here is that there is going to be names, and Caterpillar is indicative of one of them. I think some of the other automobile manufacturers, and others will start to see, hey, what's going on in the U.S. versus what's going on outside of the U.S., and companies likely are going to be punished more than rewarded more, right? And so that's kind of an interesting theme. So I would be careful here with individual positions, but also extrapolating short-term moves because we've seen such a run-up, and we're heading into one of the worst periods from a seasonal perspective. July was again kind of gave more data to the bulls that for now, with the kind of flow of funds and the sentiment, remains on the positive side.